Firstly, good evening. Thank you for inviting me over. I'm Deepak Shenoy from Capital Mind. Some of you may have been seeing our Twitter or our commentary online. And I'm sorry, I don't know enough Tamil to speak to you in Tamil, though I have to learn more. So I will speak in English, and please excuse me if if I speak in this thing, that we can always have a more interactive discussion. A quick note about Capital Mind before I start. I know we're talking about asset allocation. I want to talk to you about two different things: the outlook part, and I think something that you as MFD should look at to go as a business allocation, an asset allocation concept beyond your business, to grow your business as well. So I'll take 4 examples of that. Quick notes about Capital Mind itself. We've just got the AMC license last year. We have started our first fund in August 2025. But before that, for 10 years, we were running a research and portfolio management business. Manage about 2,000 crores in that business, about 500 crores now in the mutual fund itself. We have slowly grown over the course of the years. I started as a one-person company, and now we have about 85 people overall in the company. We also have a Cat 3 AIF and a Gift City license. But, the Gift City was our gift to Gift City, because we have not started operations. It has not gifted anything back to us yet. So, it's very early in that stage. Of course, this is just us talking about ourselves. All AMCs like to talk about themselves a lot. So, that's part of our presentation. Our fund managers, of course, come from diverse backgrounds. But one of the things about our house, and this is a core beliefs, is we use a lot of data and a lot of analysis. We look at a lot of public market data, crunch it, and we are trying to become the natural intelligence of when you have artificial intelligence to support you, to try and make sense of the data that is already around us. So we do evidence-based investing. All of our funds try to have as much of back-testable models that we can do, so that we are using little fund manager discretion. A large amount of it is coded or are created in the models themselves. So you'll see in our portfolios that a lot of changes happen on a monthly basis because the models tell us to. Sometimes we take credit, we didn't own any IT in January. Actually not, because we didn't own. The model told us don't own, so we didn't own. So we can say it is our intelligence, but it's actually mostly come from the rigor of the model itself. So we are more a quantitative oriented fund house, at least in the equity and multi-asset categories. In liquid and debt, you cannot do much there because there's not enough liquidity to do model-based work. But we do a lot of technology to support our goals as well. 4 funds, relatively small. I mean, all these numbers may look really small today, but we'll slowly scale up. The FlexiCap fund is the oldest. It's finished about 6 months. Quantitatively run 370 plus crores now. Just in the 6-month category, which is the only time that we've been here, it is in the top 10% of performance. Also in the other time frames, but I think mostly we have to finish a year before we can talk to you about performance. But early signs are okay. Liquid, multi-asset and arbitrage are relatively new. Again, here we use a lot of our own homegrown technology. Multi-asset, one of the things that we'll talk about as asset allocation is how we allocate across multiple assets. So the idea is we'll be one of the only, we actually stated goal is to go beyond gold and silver, where we're saying gold and silver are fine. In fact, we're lucky that gold and silver went up in the last year or so. But sometimes the trends are not in gold and silver. Sometimes they may be in aluminum, in zinc, in copper, in crude oil. So we have that as part of our universe as well. Apart from the fact that we have equity, debt, in debt we have REITs and InvITs as well. We have international equity, but unfortunately RBI has not given us limit. So we will add that as well. The multi-asset allocation actually has restarted after NFO subscriptions from today. So we are slowly building that up as well. Okay, so that is the advertising part of this thing. So what do we, let me just close this and get you to the other side, which is here. Where are we? Yeah. So a lot about capital minds, concept is, one of the things that we say is that when there is a crisis, you should communicate. I think all of you will also, maybe not many of you are getting questions from your investors, because I think there are too many questions and there are too many answers. If you go to WhatsApp, there are 50 things that can happen tomorrow. Today, newest thing is helium. So apparently there is a shortage of helium in the world. This is the newest crisis that has been invented, because helium is processed mostly by Qatar in the same facility which has got that hit by this, So the idea is, you need helium for everything. You need helium for semiconductors. Without helium, they will all die. So we will all die. So therefore, this is a crisis. But then you read a little more and you find out 80% of helium is actually reused, because it is not a gas that, it's a what do you call that thing? Inert gas. It doesn't react with anything, it doesn't form compounds. So you can reuse it very easily, it doesn't change. Whereas if you add sodium to something, it will become salt and other things will happen. You cannot reuse sodium that easily, but helium is reusable. So in that sense, lot of crisis elements will come to you, lot of doomsday scenarios will come to you, and they're coming to your customers also. Is it all over? So my answer is only this: there are only two choices at this point. First, everything will be over. There will be nobody left. We don't have to really plan for that situation. I mean, literally at that point, sell everything, take and enjoy whatever is remaining, because anyway money is going to be worthless. Right? Because you can extrapolate everything to that extreme, that everything is going to be over, then what is the point? It is like there is no point of doing anything, right? So the doomsday scenario is, I think, if you classify it as permanent damage in the Middle East, there's going to be no oil available, we will all be standing in line for LPG instead of being in this meeting today, and so on and so forth. That is, I think, more unlikely to happen. Not because I don't think it will happen ever. There will always be one situation that happens without us knowing anything at all. But I don't think in the last 15, 20 years when I've been looking at stuff, everything that seemed like doomsday was not doomsday. We were told when Lehman crisis happened, everything is over, there will be no financial system left. Then it was not over. Then they said, during Brexit is Britain exiting EU. Why did Indian market go down 5% that day? I don't know. I still cannot explain. But it happened. Because for some reason, now take that 5% happening on Brexit, and last year there was India-Pakistan war. Indian market didn't fall 5%. In the course of 2 weeks, not one day. That 5% for Brexit was one day. So things have changed on the ground in different ways over a period of time, but there has been no doomsday. Even in COVID, they told us, you will never go to office again. Like this, sitting without mask was unimaginable. People said, no, mask will be permanent feature. Our humans will evolve to have that place for the mask in your ears. That kind of, there was all that. What will people do who cater food to offices? They will have no job. Now they are not only catering food to offices, they are sending Swiggy people to your house to deliver that food also. But what I'm saying is that all doomsday scenarios paint one very bad picture. The other side is more exciting. Because if you believe that we will survive and we will come out of this, there are hundreds of situations I can tell you how we'll do well. Oh, India, if there is a shortage of X, we will produce that X. There will be medicines. Tomorrow this gas refinery or whatever has caught fire and has been damaged in the Middle East, who will solve it? Mostly Indian people only will be sent there to solve it. Indian companies will also get those contracts. All this is easy to say. I don't know the answer to whether it will happen or not. But take the higher picture, if the world is going to resolve itself from this crisis, like it has resolved itself from almost every crisis in the past, economies will do better in the future than India. than right now. Sorry, than right now. But more importantly, because they do so, it is your allocations to equity that will end up doing really well. Because your gold and your silver have gone up because of fear. In fact, last 2 days they have gone down also because of fear. This also nobody explains. How can there be more attacks and yet gold going down 10%, right? That also happens. But this is the problem, because you can't depend on one thing to give you everything, the support that you need. Last 2 years, I think, have been the very good time for multi-asset funds. And one of the reasons it was very good is because equities did badly when gold did well. If equities had done very well and gold also had done well, we would still be talking equity only. Now we talk gold. But if gold does badly, and you might think gold doesn't do badly, how badly does gold do? 2011, gold was $2,000 a troy ounce. In India, it was 32,000 rupees a gram. 2016, it was $1,200 a troy ounce. But because rupee had depreciated and all that, it had reached 25,000. So Indian rupee terms also, gold fell 20% over 5 years. So imagine you are buying gold, for your investor is buying gold today. 5 years later, he's 20% down. He's not going to like it quite as much. So the thing is, nothing is permanent. That's why you have asset allocation as a concept. The idea here is the short-term pain which you are going to see is more likely. Nobody can predict where the bottom is. Today the bottom will come, it will look like today is the bottom. Tomorrow Trump will come and say, I want Greenland and Cuba. He will do. Because how many ever he does, that many peace prizes he wants. So, because he's like that. I mean, you cannot, even he doesn't know what he'll say tomorrow. So, it is like, spontaneous thing. But because he doesn't, and that whole country has decided it looks silly for us to not follow him, he's our president, so they're also going. So, at some point, it seems like this is not the end of the madness, because this is one madness. We have seen 3 in the last year. I mean, there was Greenland, there was tariffs, there is this, then there was India-Pakistan war in the middle. We will see more of these madness. This is part of our lives, right? So it's not like we will see any, we got some nice period in the middle when the enemy was external. It was a virus. That virus came from outside, it attacked all of humanity, so we all got together and said, we'll fight it. We fought it, we came back, we started our offices again, everything happened. This is now fighting between ourselves. It will take more time, because nobody wants to, lose. And it will also take more time to recover, because we are doing damage to ourselves on a regular basis. So this short-term pain piece is where I think, you will have more of a suffering. So my outlook right now is we will hurt, India will hurt, because of the oil prices. We may see 102, 103. We are buying oil at 146 today. So it is tough. At some point, we are all getting isolated away from all this damage, because our petrol price is still, 95, 96. I don't know whether Chennai is less than Bangalore. 104, sorry. So you are, I thought you will have a better time than us. It turns out you are not. But at least you have roads, we don't have roads. So, so we need more petrol. But that price hasn't changed. In many countries, it's gone up 30% already. Because it went down when the prices went down, now it's gone back up. This increase is going to hurt a lot of other countries. Those countries may have inflation-related issues, interest rates will go up. All of this is short term, because we know that whatever has happened, like in a situation where you have oversupply in the economy, what happens? I'll give you an example. In 1979, silver prices went up 400%. In 80, I think it was $50 per troy ounce. Then there was a couple of brothers called the Hunt brothers. They had tried to buy as much silver as possible. They bought so much silver that they thought they owned almost all the silver, then they could control the price. Silver is not a very rare commodity. It sounds like it is a rare commodity. It is just painful to extract and refine. So that's why it's found largely where there's zinc mines and all that stuff. So the zinc guys tend to get silver as part of their extraction process. But if you make the price of silver $50 in 1980, it is worth looking for silver. So people went. Within 2 years, silver was found. There was more silver supply that came into the market. And because of that, the Hunt brothers couldn't control the supply. They went bankrupt. Every increase in demand because of a shortage of supply creates more of that supply. 1 year when onion price is 80 rupees, next year onion price is 10 rupees. Why? Because everybody is growing onions. If you double the quantity of onions coming, but the number of mouths eating those onions is roughly the same, you are not going to get a price increase, you are going to get a price decrease. So this silver specifically, gold is not much more rare, so it's not easy to find it. Silver, copper, aluminium, the prices trend. That means they'll get 2 years up, then somebody will go and find mines and do things, then they will be 2 years down, and then there's 2 years up again. So there are no concept of, okay, data center will take so much copper refining takes 2 years. It's okay. If I build a expand a copper mine today, within 2 years I will have that supply. The market will know it 1 year in advance. My stock price will start going up within that year itself. So there is a cycle to everything. So all the shortages that we will see now, because there is a war and all that, if you believe truly that the war is short term, I think your reaction will be very different than thinking it is permanent. Everything that is destroyed or hurt today will be back within a year. If it is back within a year and other people have tried to build capacity in other places, there will be an oversupply of the same commodity. So you cannot be permanently attached to a doomsday theory. The inflation will eventually go down and we will emerge of this victoriously. Will this mean that you have to buy everything? No. It still means there could be much more damage in front of us. It could look even worse than today, which means your current thought process, my current thought process is, invest over the next 6 months. Why am I in a hurry? When nobody comes on a stage asking you to invest, that is when you put lump sums. Even I will be scared to tell you to invest. That is when you should invest lump sums. I remember in 2008, there was a day in which the Nifty had fallen to 2,200. It was 6,300 in January. It was 2,200 in October, some day it was there. And I remember that time, even the TV anchors had given up. They started talking about the weather or something in CNBC. They were like, what will you talk about? This value is everywhere. Everything is value. Because it's there, and it was value at 4,000 Nifty. Now it is 2,200. Imagine the Nifty had fallen 30%. You bought, that was me. And then it fell another 50%. How will you explain this? It is not possible, right? So it happens once in a while, and that is the most optimum time to say put lump sums. Every other time put SIP, because simply I just cannot imagine any other time where I could have predicted, because every up prediction I have done, I have seen a down prediction. I have tracked, I predict once a year. We don't like to predict. I predict once a year. On Deepavali, I write a post. Not only do I predict for the next year, I also analyze my past predictions and give myself a score. I got almost all of my predictions right last year, 2024. Because I said Trump will come, I said India will, I said very importantly that Bangalore will win IPL. So that is more wish than, but we won. That 1 year you give, the rest of it you can take. So in that thing, when people read it, they said, hey, what is your next year's prediction? I said, wait boss, you see I have from 2007, all my predictions. My score is less than 50%. It is pathetic. So if I got something right 1 year, I am trying to get back to that 50%, not because I am very good. So I think you should all consider that most predictions you will hear are right now will be wrong, and we will not remember the wrong ones. Because the guys who are the right ones will be retweeting themselves on Twitter. Sir, I said this 2 months ago, I said, he will attack Iran. He said he attacked. No, so see, but he said for 5 years he will attack Pakistan, he will attack this, he won't write all that. He said only Iran, he said. So Earnings will be hit for 2 quarters at least because obviously I think no gas, prices hike. For at least 2 quarters you'll see bad results. Markets react 1 quarter in advance. So after the bad results of the March quarter, we will expect even worse results in the June quarter, which will come. But the September quarter is likely to look better at results. Our earnings growth was actually coming back. In the December quarter, large cap median earnings were up 14%, mid cap median earnings are up 18%. Although the P's are still high as an overall index basis, median P's are much lower. So, median stock retracement of mid caps is over 45%. That means if you rank them all in terms of distance from their all-time high, median stocks are much lower. Okay, so let me just go a little bit further. How bad has it been in the past? We are down 11% today. That's the green bar. And we are, I think, we are at roughly, last year at this time, we were 18% down. Why does it seem worse than last year? Last year we were 18% down, now 11% down. Now we think it's the end of the world compared to last year. Because last year everybody else was also falling. Even America was falling. Today Korea is up 22% year to date. America is down only 4%. That's why we feel bad. Why we are hurting so much more and everybody else is okay. But otherwise there have been many other instances where things have been much worse. Think of recession as or a bear market as 20% from the all-time high. This current market is not a bear market because the index is not 20% from the all-time high, and it went only about 18%. Right now it's only 11%. But only 7 of the last 18 times when the market has fallen more than 10%, has it ever fallen more than 20%. That means if your thought process is the market falls 10%, I will exit. Then I will come back when the market falls really bad bear market. Answer is, if you look at the past, every time it fell 10%, it does not mean it will fall 20%. In fact, only 7 out of 18 times has it fallen all the way to 20% plus. We are at minus 10% today. So the answer is not sell today, come back when the clarity is there. In fact, it is to invest in over a period of time rather than everything else. I think the idea is to stay invested through volatility, because every volatile situation has its own better path. Valuations wise, we are in so we are actually in decent shape compared to last time. Of course, this was done about 2 days ago. So I don't know what the current numbers are, but it's come close. So you look at the P ratios also, they have come down from the 25, 26 median Ps to 22, and then current Nifty P ratio is only 20.8, around 21. I think this earnings will come back and mitigate all of this. We are much lower than the median. As you can see, there is more than 30% of Nifty 500 stocks, not just mid caps, Nifty top 500, that are down more than 30% from their all-time high. Half the Nifty 500 stocks, 250, are down more than 30% from their own all-time highs. So it is a better market in terms of valuations, but the idea now is to look at where we are going to go. Okay, so I'll talk about 4 things that is useful to talk to customers at this point, because the war everybody can talk about. We've said there are lots of alternatives. I think the idea is, if markets recover in the end, what do you do? This is one of the things that I have has a story to say. What's the difference between doing an SIP and doing an increasing SIP? Because everybody says 20-year SIP, 10,000 rupees. 20 years ago, 10,000 rupees was more than my salary. Myself, because I was running my own company, I didn't have enough money to pay myself. But now it is a fraction of my salary. So it is not the same thing to have the same amount of money. To give an example, 20 years ago or 10 years ago, 10,000 rupees a month if you had increased by 10% per year, it would have become 67,000 rupees today. 20 years. 20 years it would have become 67,000. So it's not like it's insanely high also. But if you every year increased your SIP by 10%, just once a year, just switch to that 10%. What is that once? April, it is coming. Your increments will come, your changes will come. If you increment just that by 10%, you might say, what is the difference? So if you look at this, I don't know if you can see the numbers. Okay, it's there, yeah. 1.77 crores it becomes if you increase your SIP by 10% per year versus 87 lakhs. So there is a fairly large increase in wealth, nearly 1 crore more, that comes just because you have increased your SIP. This has a compounding effect for two reasons. You have increased the amount you invested. And secondly, you allowed the money to compound, right? So what is this difference? I'll tell you a quick, small story. It's like this. You say, oh, Deepak, you invested more, it's unfair. But where is this increased money gone? If I kept doing 10,000 rupee SIP, I didn't increase. What did I do with that remaining money? There's a story. The man who's standing, and I'm sorry for using this term, but he's smoking. And this other person comes to him and says, sir, you're smoking. How much do you smoke? 20 cigarettes a day. Oh, 20 cigarettes a day, you pay how much? 15 rupees per cigarette? Yeah. Oh, so how long have you been smoking? 20 years. So if you must have spent this much money, if you had done, he does his calculation and he says, if you had taken all that money and put it into SIP, you would have had enough money to buy a Ferrari. I said, well, good point. He throws away a cigarette and says, do you smoke? He says, no. Where is your Ferrari? So, that is the point. This increasing SIP is like if you put increasing, if you don't increase it, that money is gone. It's spent off. It is not like he's building a Ferrari. So, that is the point over here. Two things that have happened to you. You can gift mutual funds now. Gifting mutual funds to your family, now it's fully online. You can do it on MF Central and you will not lose any commission if your customers' units are gifted. The gifted units carry over the commissions, which means you can go to MF Central today, tomorrow it will come to all our websites, all the AMC websites. You can tell them, listen, every year you get 1.25 lakhs, no. And if somebody is not earning, you get 4 lakhs. You gift your units to your family and take book profits to the extent that is not taxable, reinvest back into the same fund. It's okay. But at least you have reduced your tax base. Tomorrow when you need the money, you will pay much lesser taxes. You can do this. You can gift money to other people whom you are not related to, but that attracts capital gains tax for you. If you give it to your family, there is no capital gains tax for you. To quickly note, the idea of the gifting will be completely online. So all you need is one backup gift deed that needs to be written and the procedure. This procedure currently requires both people to be available at the same time. But tomorrow this will change. You will be able to generate a link for your person you are gifting to. Say you go there, you do your KYC. When you are done, the units will be transferred to you. If it's your own family, brother, sister, wife, daughter, son, and all of them, there will be no capital gains tax, neither, and there's no income tax to them also. So this gifting may be a useful thing. You can do it for SOA units, not for DMAT units, only for SOA units. It has been announced. This is a useful thing to take to your customers for both tax planning and because now it's the end of, I think, not enough days now. But if you can do it now, that's great because you get this financial year and then you can get the next financial year also. But I know that your customers will ask you what profit. We should avoid that question at this point because the markets are a little weak. But anyone who has invested since 2001 or 2000 onwards has at least seen a 2x, 3x increase in their portfolio. At least you can get some of those units off the tax bracket by moving into this 1.25 lakh assumption now. Okay, I'll send this over later. HUF is also an interesting philosophy because under the new income tax law, even they get the 1.25 lakhs limit. So you can create an HUF if you're, I think, 4 kinds, Hindu, Jain, Buddhist, and Sikh can create a HUF. By virtue of being married, you have an HUF. So you can quickly create a deed, send it to Pune, they will send one PAN card, that's done. Then you just have to open a bank account, invest from that bank account, and the HUF work will be entirely done. This allows extra income. Now, most importantly, I'll send this over, and I know I'm running out of time, so I'll quickly try to do this. There is a 12 lakh limit on income, non-capital gains. So why leave that at all? So your dividend mutual funds or fixed deposits are another way for you to become business allocators. You are helping your customers. Does it have to be mutual funds? I am saying this as a mutual fund CEO. Please don't quote me to other people, because that AMC will send notice otherwise. But you can do fixed deposits also. There is nothing wrong with it. And today banks are more than willing to share commissions, especially they are doing it for online platforms. This can be done online with a click. So if it's a good bank, then everybody wants fixed deposits also. No, more people want fixed deposits than this thing. It may be a useful addition to your portfolio, saying I can help you make an HUF, I can help you with this gifting proposals, I can also help you with fixed deposits, or use the dividend version of mutual funds, IDCW, that allows you this 12 lakh income if you have no other income. If you create an HUF, that full 12 lakhs can be taken by the HUF also. I think so, for the most part. I'm not sure. 4 lakhs at least for sure. But you may not be able to do 12 lakhs because of this thing. I have to, only for salaried people, 12 lakh. Really? Only, not even for non-salaried people, is it? Business people also is not allowed. Salary and business. Not for dividends. Okay, so the 4 lakhs at least is something that you can take out of the kitty from there. This is useful because 4 lakhs into 10 years is 40 lakhs. 40 lakhs non-taxable income versus 30% tax on it. You are saving your investors at least 10 lakhs over a 10-year period. This is useful because when people ask you, why am I paying you commission? You have quantifiable answers eventually. Because people think commission is taking away from their return. I say no, your commission is for all the advice and hand-holding you are getting. Whereas if you pay an advisor, you will pay that person separately. Here it's played together, that's why it's this thing. So that's another way to add. Last bit is something that's coming. We will talk about this more, life cycle mutual funds, which are going to come from, it has been announced by SEBI. The idea here is, if I am going to retire, hopefully sometime I'm going to retire. 2034, technically I should be retiring. So I'll buy a 2035 target date fund. This fund will mostly invest in equity now because 9 years are left or 8 years are left. But as it comes closer, it will go into debt and fixed income. And one carve out is there that allows it to be more than 35% non-debt through arbitrage, so that when I retire, I don't have to take the money out as debt taxation, I get equity taxation for the money. So automatic rebalancing, if I did it myself, I'd pay tax every year. Now this is automatically rebalanced. Very good for people to just SIP into that one fund and forever build their portfolio there. Of course, the fund has to be good and so on, but the idea will come to you over a period of time. These are, I think, 4 different things that you could do in a time like this, which actually adds a lot of value, because at this point, since everything is going down in the markets, everything seems hollow. Yes, markets will recover. How many times have we heard that? They always recover also, but it seems very boring to say that. It's more exciting to say the world will end tomorrow. Right? The financial negativity is there. Sorry, yeah. So we have this, I'm running out of time, but there's Timmanna here, and we have Parveen, who is actually yes. I want to introduce Timmanna here. He's the head of sales. He's in Bangalore, but we have Parveen here also, who's in Chennai. So please feel free to connect with him in case you have any questions, answers, you want to know what our fact sheets have a lot of information, plus 3 articles every month, which contain data and analysis from our fund managers. Parveen is also available to have discuss for any logistics that are required, and we'd love to hear from you. Thank you so much for spending an afternoon with us here. Thank you, and thank you IFPA for having me here.